All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2023 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. Up next, we have a panel presentation, which we hope you'll find insightful, with executives from two of the leading technology-assisted reproductive providers in the global fertility market. We've titled the panel Fertility Frontiers, Leading-Edge Technologies Addressing the Fertility Market here. Maybe as a little bit of background, I think when most people think of assisted reproductive technologies, the first thing that they'll likely come to mind is IVF, or in vitro fertilization. Methods of IVF had advanced dramatically since the first IVF baby was born in 1978 in England, dubbed the test tube baby, including a technique actually pioneered by the company of one of our panelists here, which allows for the fertilization of the egg to occur not in a test tube in a laboratory, but inside the patient's own body. And we'll get to that a little bit more here shortly. Originally, IVF yielded single-digit patient sort of percent success rates. Today, however, IVF is now successful in nearly 50% of cases in which the woman is younger than 35 years old. It's estimated that there are approximately 1 million babies born from the procedure every single year. IVF in particular is said to account for between 1% and 3% of all births every year in the US and Europe, translating into a global ART market of more than about $20 billion today. Importantly, this market is growing according to comprehensive research that's been out there by Market Research Futures. Fertility market expected to grow to more than $46 billion by 2030. Another report, this sort of entrenched secular trend appears to be global rather than local, with evidence of expansion, not only in mature healthcare economies such as the United States, but also in key emerging markets such as India, Latin America, and the MENA region. So, with that sort of setting the stage, let's turn the conversation to our panelists. If we could first start off by having each of you introduce yourself, providing a little bit of background on both yourselves and the company, that'd be great. David, why don't you begin?
All right, terrific, Robert. Thank you very much for having me. So my name is David Wolf. I'm the President and CEO of Hamilton Thorne. I've been privileged to have this role for now almost 12 years. I joined in 2011. And during that period, we've taken our company from, at that point, a relatively small provider of a couple of point solutions of products that are used in the IVF clinic, to today one of the larger, on a worldwide basis, and one of the most comprehensive providers of virtually all of the products that are used in sort of the laboratory setting in the clinic. So just to be very clear, we don't run IVF clinics. We provide the products that are used in IVF clinics. So it can be a wide range of products, again, primarily in the laboratory. We're a fairly, again, for a relatively small business, but fairly mature. We are publicly listed on the Toronto Stock Exchange. Our symbol is HTL. And just to give you a couple of metrics, I won't bore you with all of the numbers. We report in US dollars, so everything I'll talk about will be US dollars. We finished our June 30 quarter, so on a trailing 12-month basis, with revenues of around $63 million. We are profitable with positive cash flow, had just under $11 million of EBITDA. And we've grown our business pretty substantially through a combination of organic growth, above market organic growth, I'm happy to say, as well as a very active acquisition program.
Perfect. Thank you for that, David. Steve?
Great. Thanks, Robert. I appreciate you setting up this discussion. It's great to be participating with David today. My name is Steve Shum. I'm the CEO of INVO Bioscience. My background is in finance and management. I've worked with a number of small public companies throughout my career, with an emphasis on financing of the business and general strategic direction, as well as helping to bring in key personnel to help manage the organization. I was introduced to INVO in the fertility marketplace back in 2017, and initially became involved in 2017 as a board member of INVO, and then later as the CEO in 2019. The genesis of INVO was around an innovative medical device called the INVO cell, which enables an alternative treatment method from that of conventional IVF, which is now defined as IVC. INVOcell was originally cleared for use in the marketplace back in 2015. Over the many years, the company has worked very hard to build confidence in the market and demonstrate IVC as a comparable or equivalent option to that of traditional IVF. This was, further highlighted with our 510(k), which was recently cleared by the FDA for expanded usage of the device, with the data used to support that submission demonstrating excellent results, which were very much equivalent to that of conventional IVF. From a commercial standpoint, INVO has dramatically evolved its approach beyond just a medical device company and is now operating within the fertility services part of the market through the ownership of clinics.
Perfect. Thank you, Steve. David, sort of transitioning back, I want to sort of start at a higher level for those that may not be familiar with the general sort of IVF process. Walk us through the process and sort of all that's involved there.
Sure. So I'll be happy to walk you through, what has been the traditional IVF process. Steve's company is working on disrupting some of this, and I'll let him describe some of those differences. But today, certainly the vast majority of people who do assisted reproduction are doing some form of more traditional IVF. So what typically happens in the IVF process, some family is looking to have children, have some kind of problem, and either addressed through male and female factors. So you can imagine there are a series of diagnostics. You would do sperm analysis, physical examinations and the like. But once one determines that IVF is needed, that some very more aggressive assisted reproduction is needed, the process begins typically with drug treatments, so hormonal treatments to stimulate ovulation. As you probably know, most women produce one egg per month, and for IVF, because it's a procedure where there's a lot of effort involved, you want to have more than one egg. So you typically again do hormonal stimulation, get 10, 12, maybe as many as 15 eggs with an aggressive stimulation, less with an less aggressive stimulation. Then you move into the clinic setting. The eggs are it's called ovum pickup, removed from the body, as well as sperm is collected from the man, whether it's a partner or sometimes can be a donor sperm. They are typical. There's a lot of individual steps along the way, but in a broad space, they are combined either with what one had traditionally called natural IVF in a dish, and the sperm will find the egg, or something called ICSI, which is intracytoplasmic sperm injection. I'll try to keep the jargon to a minimum, where the egg is actually injected into, the sperm is actually injected into the egg. And that can happen a lot when there's some problem with the male factor. The sperm are not quite mobile or motile enough. The egg is then, or the egg, if it's fertilized, becomes an embryo and is then incubated and nurtured, fed with cell culture media, incubated in a environment. It's to the extent a metal box can simulate a human body, with temperature, gas, and humidity. Is the egg typically, or the embryo is typically taken out of that box once a day for examination, or pictures are taken on a 5 to 10 minute basis to do time lapse to be able to really monitor that egg or that embryo. So embryo assessment is important. Ultimately, the clinician typically selects one or more of the best embryos. The process is moving more to single embryo transfer. Typically, you want one baby and trying to avoid having multiple embryos transferred and avoid having twins and triplets. And then the balance are frozen for later use. So that process, I described in 4 or 5 minutes, happens over 2 or 3 weeks. A couple of weeks for the drug treatment and 5, 6, or 7 days, sometimes at the maximum in the laboratory. And then if everybody's done a good job and there's a reasonable amount of luck, you might end up with a healthy baby 9 months later.
Perfect. Thank you for that, David. Steve, as I mentioned at the onset, IVF, or in sort of your case, IVF or IBC rates have increased significantly over the last number of decades, from sort of single-digit percentage success to about 50% today. Talk about some of the key drivers behind that improvement.
Sure. Maybe before I actually address your question, let me just follow up with David's description of the process and the procedure and what the difference is with INVO and IVC. We pretty much, for our treatment method, follow very similar, almost identical process and procedure, with the exception of one key difference, which is when the eggs and the sperm are combined, rather than going in a dish into a laboratory incubator, they go into our device. I'm not sure how well this shows up on the screen, but it's a small device that we put the eggs and sperm in here, and we place that in the patient's body for that incubation period. So we're actually using our device and the patient's own body as the incubator rather than the laboratory incubator. Everything else is pretty much identical in the rest of the treatment procedure. So just provide that context and explain the difference between conventional IVF and IVC. Back to your question, generally speaking, improved success rates have been driven by a number of factors: technical expertise and experience in the clinic by the physicians, technology improvements, the equipment used in the clinic, medications, and the longer incubation time. The move toward 5-day transfer periods has been a major factor in those improvements. For us, in the INVO device and the IVC procedure, we have benefited from these general industry improvements as well. And as our recent 510(k) results demonstrated, incubating for a longer 5-day period with INVO is also a major factor enabling much better results, making IVC an equivalent procedure to conventional IVF.
Gotcha. David, sort of transitioning back over, as I also mentioned at the beginning there, there's sort of a large market. It's growing. In your opinion, what have been some of the biggest drivers to this market expansion?
Yeah, so I think there are three main drivers. One is purely demographic, that I think it's well known and accepted that fertility and most of the problems that are addressed with IVF, though they can be male or female, tends to focus on the woman, that a woman's fertility tends to stay stable. It can be, great fertility or not so great, but tends to stay stable to the early 30s, begin to decline in the mid 30s, and then drop very precipitously in late 30s. And with the, I think most people have seen this with friends, family, or colleagues. People are waiting longer to have kids. They establish their careers, whatever they're doing, and we're seeing just more and more people needing to, because they're putting off childbirth till they're in their mid to late 30s, needing to have some kind of assisted reproductive assistance. Second major factor is affordability. So IVF is a very expensive procedure, as you can imagine. Certainly traditional IVF, and again, Steve's group is doing some things to address that, perhaps. And we're seeing significant trends and differences depending upon how IVF is paid for and what it costs. So just to give you an example, in the U.S., where the majority of treatments are private paid for by the patient, and it can be $15,000 to $20,000 per individual cycle, and you might need 2 or 3 to be successful. So cost can add up pretty quickly. The majority, as I said, the majority of those are paid for by the patient. There is some insurance in a number of states, but it's very clear that and our per capita use of IVF is about 2%. So 2% of babies born in the U.S. have some kind of assisted reproductive intervention. In Europe, where there's much more acceptance of insurance and state state support, whether it's public hospitals or the like, on average, the per capita usage of IVF is about double, so about 4%. And in some countries that have very aggressive IVF payment options and perhaps not fewer limits on how many children or age, such as Denmark, it can be about 8%. So the fact that, not surprisingly, if somebody else is paying for a medical procedure, people tend to do more of it. That is really one of the significant factors. And though it's not huge change, even in the U.S., we're seeing more and more states adopting or mandating IVF treatment, as well as large employers begin to offer IVF coverage. So Walmart, for example, which is the world's largest employer, so the U.S.'s largest employer, now has an IVF benefit available to all of its workforce for them to take advantage of. Other large employers, particularly tech employers, the Facebooks and Googles and Microsofts of the world, offer very generous insurance, and you're seeing that expand into other knowledge worker situations, whether it's banks, insurance companies, universities, and the like. So, just the more and more insurance. And lastly, on the affordability side, emerging markets, which you mentioned earlier, have become a much larger part of the equation for us. And India, you mentioned, I like to use this as an example. You wouldn't think there's a birth rate problem. In fact, there isn't across the entire country, but it's a stratified society. So in rural areas, family formation happens pretty young, but in the urban areas, people are behaving like North Americans, and as it's mentioned, spending their 20s and 30s establishing their careers, getting their education, and then they have the same need for IVF. And because there's now growing wealth and growing income in those countries, you can see much more opportunity for IVF because people can afford to pay for it. So I think those are the broad trends, and those are I think those are slowly beginning have been felt over the last number of years, and just show no signs of abating. So these, to me, are just long-term mega trends that are going to provide significant tailwinds for both of our businesses for a long time.
Yeah, no, that's great. Thank you for that, Dave. Steve, building sort of off that topic there, do we have the skilled practitioners and sort of just the facilities to meet this demand? And maybe just talk in general about industry capacity.
Sure. Well, first of all, we agree with many other market participants that there's a very large underserved patient population out there. The statistics and the data support that point of view, that there are many in need of assistance but are not receiving care. For example, here in the U.S., based on general population stats and demographics and average rates of infertility, the CDC's estimated roughly 6.5 to 7 million patients are experiencing infertility issues. That was an earlier report from a few years back, and I would suspect those figures have only expanded with population growth and ongoing increases in general infertility rates. Of course, that doesn't mean all those potential patients are seeking care or interested in care. The U.S. IVF market capacity-wise is performing around 415,000 procedures per year based on the latest available data across 453 clinics. We hear many of the clinics are busy with wait lists ranging from a few months to as high as 6 months. All that in our mind would certainly suggest we do not have sufficient infrastructure or capacity currently. But again, we also think patient affordability, as David mentioned, is an important factor in all this. Providing more affordable care for patients, whether through insurance coverage, which is certainly improving, or by way of technology or general operating efficiencies that can bring costs down and pass through to patients, would likely drive demand much higher. But that in turn would strain the current infrastructure capacity. So, the market needs to focus on both patient affordability as well as ways to improve capacity, leverage the existing infrastructure, and in order for our ability to provide a greater care to a greater number of patients. And all these dynamics exist in many other markets around the world, and maybe worse in some parts. INVO's focused its whole market strategy around some of these key factors, providing more affordable care and trying to do so through our technology through a more efficient process within the clinic.
Thank you for that, Steve. David, let's talk about sort of the structure of the marketplace and, sort of specifically doctors that are delivering the care. Is this sort of a fragmented market, or has there been some consolidation by hospital groups? Sort of talk about that a little bit.
Sure. So as you can imagine, the answer to that varies, meaningfully, region by region, country by country. Historically, IVF clinics started as either part of hospitals or entrepreneurial focused, either physicians or embryologists who decided that they would found a clinic and develop that. You mentioned that the IVF, genesis of IVF was in the late 70s, but it really got going, around the turn of the millennium, in the 90s, mid 90s, and a lot of those, certainly physician owners have reached, like a lot of people in the boomer generation, have reached retirement age and have been looking for alternatives. So that combined with emerging general interest in IVF based on the trends and factors that we've both been talking about, as well as some trends in the private equity side, have actually led to some significant consolidation in certain countries. There are large clinic chains that are backed typically by private equity. There are a couple of public company clinics, but that has not yet become a major trend. That may happen or not. But typically, private equity has led the way in clinic consolidation. There are as well some entrepreneurial doctors that have done their own consolidations. But still, it's if you look at even the largest clinic chains, they still have a relatively small percent of the worldwide market in a particular geography. There may be greater or lesser concentration, but that's a trend that certainly has happened. It remains to be seen how that will play out. There's been a lot of fields that have consolidated over time and then kind of decentralized, and that's an area that continues to happen. Healthcare tends to trend towards consolidation because there are both economies of scale and as well as economies of skills. So, I think that's a trend that we'll continue to see. But clearly, there's no such thing as like a dominant player in this field. They're certainly larger rather than smaller, but it's in some ways it's still a very wide open area, and particularly with the growth that we should see over time, there's still a lot of white space to fill.
Perfect. Thank you, David. Steve, I want to come back on a topic that you mentioned, and I think David mentioned in his introductory remarks as well, or at least when it was discussion about the process here, which is sort of the size of the market. That despite this sort of massive size, many go without treatment because of probably cost being one of the key factors. And maybe talk a little bit more about sort of the costs of the various technologies in some more detail, and then sort of again understanding how insurance does play the role in it.
Sure. Well, as many familiar with the industry know, and as David already highlighted, IVF is expensive, anywhere from $12,000 to over $20,000 for treatment, depending on location and specific treatment options. And despite improvements in insurance, which is certainly a positive, there are still significant number of patients that must come out of pocket on that cost, whether entirely or partially. And many patients, as David mentioned, go through multiple attempts, which really dramatically increases the cost. So this affordability factor from a patient standpoint is a major factor that makes it prohibitive for many and contributes to this underserved market potential. So as I mentioned, the industry, should strive to try to continue to work towards solving, this key patient challenge. For INVO, that's one of our core missions or focus. We tend to, through our own clinics, as well as clinics that have utilized our technology within their practice, tend to offer INVO and the IVC treatment at a much reduced price point or cost to the patient than what they would typically see with conventional IVF. And for us, we see that as, we're able to pass some of the efficiencies in the lab, but through our technology, we're able to streamline some of the lab issues, and that's being passed on to the patient. And it allows, in our minds, it allows a clinic to really see more patients with, within the existing same infrastructure. So that's it's really achieving both benefits of helping to provide a more affordable solution, as well as ultimately drive capacity increases for the industry.
David, you touched on this a little bit, but I want to just make sure we sort of put a fine point on it. Your company has sales and support infrastructure in more than 75 countries, I think it is, if I'm not mistaken. Sort of talk about the fertility market. We obviously think about it mostly here in the U.S., but outside the U.S. as well. You've touched on India here a little bit. So just talking generalities about your views on sort of the established markets, both domestically and internationally, but also sort of those emerging markets.
Sure. So, fertility is actually something of an outlier in medicine. When most people think about, Americans think about medicine, and they think about, both innovation and usage. They're very, very, very U.S. centered, and that's not atypical. Whether it's in pharmacy or maybe orthopedics or whatever, where you can have huge companies and most of their business is in the U.S. In fact, the IVF field is very, very different. The U.S., as I think Steve mentioned, is about 400,000 cycles. That's out of 4 million that are done worldwide. So the U.S. is actually, in some ways, a very small player in the global IVF market. That has a lot to do with some of the things we talked about earlier, primarily reimbursements. That in Europe, which has also had a much longer period of need, in the sense that women have been waiting longer to have kids, and family formations happen later there for a longer period of time, as well as much greater payment. As I to repeat myself, the per capita usage of IVF is significantly higher. And you find that, in fact, Europe in general, while it has, maybe 1.5 times the population of the U.S., has, maybe 3 or 4 times the usage of IVF. So, significantly larger market. The Asia Pac region is becoming on very, very strong. China is, if it not already, will be the world's largest IVF market. Japan is a very, very large IVF market, with, again, back to the usage, with roughly 1/3 of the population of the U.S., about the same size IVF market. So there are, really significant markets outside the U.S. So that's one of the reasons we play globally. In fact, about just 30%-ish of our business is in the Americas, and we punch above our weight in that, because the Americas, to get with North and South America, is certainly far less than 30% of the global market. About 50% of our business is in Europe, which is consistent with the long tradition of IVF there. And as I mentioned, the Asia Pac region is coming on very strong. About 20% of our business, but more than 20% of the overall market. So one of the areas that you can imagine we and others will continue to grow, continue to focus on. And back to trends, I think in general, certainly the North American market is growing very, very well. Affordability is improving, technologies are improving, and then so the access is improving. There are, as Steve mentioned, certainly some infrastructure and capacity issues, but those, I think those are generally worldwide, and they're hopefully being addressed. The European market, because it's so mature and relatively well served, is growing a little bit slower, still growing, but not growing quite as much as, say, the North American market. And then emerging markets, whether it's, India, South America, parts of Africa, Middle East, you mentioned, is growing substantially. So we would expect those to be the fastest growing regions over, the next 3, 5, and 10 years.
Yeah, that makeup's quite different than many other sort of healthcare related services and drug related market breakdowns. Um, Steve, sort of diving more specifically into the company here. INVO Bioscience has sort of transitioned, as you said at the beginning, to more of a services company as opposed to just simply selling your INVO cell technology to sort of other service providers. Talk about some of the reasons behind that.
Yeah, sure. Our decision to expand our market approach was really driven by a couple of key factors. One, introducing a new device and treatment method into an existing market where the clinics are busy and inherently reserved about changes, or introducing new processes presented challenges and really a very slow adoption rate for the technology. And we believe this was really exacerbated by the fact that INVOcell was not really on the same playing field for until here just recently, in that the original FDA clearance back in 2015 was for 3-day incubation periods versus the more common 5-day incubation period with conventional IVF, and thus was seen as an inferior solution to IVF. Of course, we believe differently, and finally really demonstrated that with our recent 510 clearance for expanded 5-day usage. So now we can market and represent the results of incubating with our technology for 5 days, and we feel that we're now more on an equal playing field with conventional IVF. And again, this just happened recently, a few months back here, that we finally accomplished that goal. Second, we also felt it was important to build the company more quickly to help provide a foundation in which to drive long-term growth. And we believe the best way to accomplish that, especially in the face of the challenges with just selling the device to existing practices, was to expand our efforts into the service or full treatment aspect of the market, which essentially has now evolved us into more of a healthcare services model, as you mentioned, but still with unique technology. We now have partnership clinics focused on providing INVOcell and IVC, which we call INVO centers. And most recently, we actually acquired an established and profitable IVF clinic where we will eventually incorporate INVOcell into that practice. But it's important to note that we believe our expanded approach with these commercial efforts, whether building new clinics that we call INVO centers focused on INVOcell, or actually now acquiring existing IVF practices where we can selectively do that, ultimately will help drive usage of INVOcell in the market, something we feel is important as our technology helps address affordability for patients and efficiencies in care, and hence can add capacity to the market. We very much are believers that the INVOcell has a place in the market, and again can really help address some of the challenges in the marketplace.
Sort of David, on your side here, talking a little bit more specifically about Hamilton Thorne, talk a bit about your long-term growth strategies, how you sort of mix acquisitions with organic growth, and some of your key drivers for future success.
Sure. So, I think our long-term growth is, starts with the fact that, as I mentioned earlier, we're fortunate to be in a field that has significant growth. The market research is kind of all over the place, but we view that in general, if you look on a worldwide basis, the field is growing, 7% a year plus or minus in terms of numbers of procedures. So that's a pretty good tailwind to have, where medical devices last year grew about 3%, and this year they've been flat. So we're seeing good growth in some areas, I should say, and so we're seeing good opportunities for growth, and the demographic trends that we've seen, as I mentioned, should continue. We've augmented our organic growth, so we've been growing faster than the market by establishing and expanding our direct sales. So we now sell direct in North America and most of the major markets in Europe, and we're beginning to sell direct in parts of Asia. As I mentioned, Asia's has some has great opportunities, but some unique challenges. So we're taking that a little bit cautiously. We're going to start a little bit at a time and expand that. We've also grown, as you mentioned, through acquisition. Our acquisition model is really motivated with three drivers. One is to increase the size and scale of our business, which we've done pretty dramatically over the past five or more years. Second is to expand the breadth of our product line so that we can, over time, be able to provide virtually everything of high value that's used in the clinics. We're not necessarily interested in pure commodity products or maybe the clinic furniture, but everything that's really used in the clinic that we want, and other than drugs, which is obviously a separate part of the world, we want to be able to provide. And third is to improve, I would call quality of revenues. So we've typically looked at acquisitions that have recurring revenue and higher margins more favorably, but not surprisingly, than other, and as well as acquisitions that can expand our direct sales footprint. Are important for us. So actually, in breaking news, we just completed an acquisition. We bought a nice business based in Belgium that expands our product offering into two important parts of the IVF procedure that I described, which are ovum pickup needles and embryo transfer catheters. Products that are used in conventional IVF, and as Steve mentioned, the procedure would be very similar, also would be used in INVO clinics. So must-haves in essentially in every IVF procedure, every IVF lab. So we continue to grow across all these dimensions, and as I mentioned, as you can imagine, just very, very bullish and positive about the overall trends in the field, and optimistic about our ability to be able to continue to grow and prosper, and in light of those tailwinds.
Perfect. And I know we're sort of almost at the end of the time here, but Steve, maybe as you also look a few years out here, what do you think will be the key drivers for success for INVO?
I'd say with our existing INVO centers making excellent progress, and from our perspective, proving or validating that we can establish a successful practice based on the INVOcell technology and IVC procedure, really expanding this concept and building additional INVO centers will be a key driver to our growth and is one of our core objectives long term. We also feel that acquisitions will play a key driver for the business. We just closed our first acquisition, and we believe we have additional opportunities in the market. So those are really the two elements of just continuing to build on our clinic activities, whether it be creating or developing additional INVO centers or strategically acquiring smaller practices in the marketplace. And I would just give a quick shout out to David. Congratulations on the acquisition. Those are always, challenging, as you know, but they're a great accomplishment. So congratulations.
Oh, thank you.
Perfect. Well, look, I think we've sort of come to the end of the time, but which I found this incredibly insightful. I hope everyone else did. David, sort of any closing comments as we wrap up here?
Yeah, so instead of making this commercial, I guess I'd just like to thank you for the opportunity to present to the participants in your conference, and look forward to anybody who wants to find out more about our company. Again, our website is www.hamiltonthorne.ltd, and we're traded on the TSX under the symbol HDL.
Perfect. And Steve, same to you.
I would echo David. Appreciate you, Robert, for putting this on. I think this was great. I would also just say that the fertility marketplace is an exciting industry with substantial room for growth and an opportunity to really help more patients as we address some of the key issues out there, and all of which can make for a very successful business opportunity and a chance to drive significant value over time. And as I neglected to mention at the beginning, we too are publicly traded. INVO is the symbol, and we're traded in the U.S. market.
Perfect. Well, David, Steve, thank you very much for your participation today. It's greatly appreciated. I'll sort of say to anyone in the audience, if you'd like to get in touch with either of the panelists here today, shoot me an email, blum@lythampartners.com. I'd be happy to get things coordinated there for y'all. Again, thank you very much for joining us. We hope you enjoyed the conference. David, Steve, thank you again.
Thank you.
Real pleasure. Thank you.